Borsellino, man over market, and today is the 16th of September, one day away from the Fed ultimate movement of, I'm going to try to keep my hands still so I don't distract you. Anyway, Fed meeting tomorrow. Went into session. The decision whether they're going to raise rates will come out tomorrow at 2 o'clock. Well, whatever. I think 2 o'clock Central. Anyway, big rally yesterday in S&Ps. I thought the rally is a short covering rally. I think today we're going to get a little bit of a retracement. We left some single prints down here that we have to look at. We'll get to it, but I want you to, wanted to know that I thought yesterday was a short covering rally, and we certainly didn't get past the top of the range that I've been talking about, which is that 50% move from the high and the October lows. I will show you that in a second. So let me start sharing the screen. Okay, let's go here. Share. Okay. All right. Let's talk about profile overnight first. And we got our glitch fixed. So we have accurate data now. All right. So we have a high in the overnight right here. Let me put this on cross. Cursor, crosshair, that helps me. Okay, here we go. We have a high in the overnight right there at 1972.75. 1972.75. So for you NinjaTrader users out there, this is our version of the profile. It'll be a MOM indicator. You'll be able to open a chart and be able to get this when we are now a NinjaTrader partner. Okay, right here we have bracket F is the low of 1962.75, and then yesterday I'm blowing this chart up because the market is I know when you guys are looking at it on YouTube, it's sometimes a little difficult to see. So I've blown these charts up, trying to give you a better idea of how the profile prints. So here's yesterday's high. We closed up on the high. As you can see, there was literally no value area high. And when I get to our bar charts, I'm going to show you the significance of where we're at. Okay. So this was the end of the day action. Yesterday was a true trend day up, right? And I put it out early. So take a look at bracket I. So we got some single prints down here left at 1962.5, 62.25. Okay. And here's bracket D. So this was all the mid-afternoon, and then bracket D, we have single prints from 1955.75 down to 1954.25, right? Now, just because we had that huge rally yesterday, and then this is the way yesterday I put this out. This is yesterday's action, showing you how a trend day trades, right? And then we've got these single prints. So this is single prints, but also it's a buying tail. So this buying tail could remain intact for a while. Okay. So that's what we're looking at as far as the overnight action. When I take a look at the overnight action in the profile, it's kind of hard to get a bull bear zone because we're really, really evenly distributed, and we are trading, as you can see, all right, we're trading like sort of in the middle of the distribution from the overnight. So obviously this is unfinished up there, okay? And then we have all the things down below that I talk, and this is unfinished on the bottom. So based on the Fed coming out tomorrow, we should be getting a choppy two-sided trade, maybe very slow, because we had the big short covering rally yesterday. There's no way that was not a short covering rally. And so I bring you back to my spaghetti chart, or my 2-year chart. All right. And here it is right here. This is what we're looking at. Okay. We're still in this range. So this 1947, 74, 57. Okay. That's the 50% from the high and the low of October. So last year of October, we put a low in down here on 1813. This was the low that we made on the day that we lock limit. This is 1831, as you can see right here. So this red bar is the low from 1831. So we're stuck right here. But look what we're getting here. Consolidation, consolidation. We talked about this yesterday. We've been getting higher lows, okay? And we kind of keep stopping right about here, right? So obviously it looks like we got to get above 1992.75. That's this high to keep moving. And the next target would be 2016, right? All right. So this is what we got. This is what we have to work with going into the Fed day. Going into the Fed day. Listen, if you have questions out there, make sure you type them in, and we'll start talking about those things, because I know there's people with a lot of questions. So let me go here. I keep showing you the same chart and same stuff, but guess what? There is no holy grail. All there is the process, and we have to hone in our thinking on the process, right? So here's the 2-year chart. This is the lows in October. Here's the highs. Here's the retracement. Remember, I talk about how this was, straight up every day, tick up, tick up, tick up. And now we have what we're talking about, consolidation. We're putting volume in here, and this is could be a foundation being built to go out and test the highs by the end of the year. Okay, that's what I think. Okay, that's my opinion. Oh, by the way, I didn't read our disclosure, but I will read it at the end, so this way we don't have a problem. All right. Anyway, let's take a look at what we're looking at as far as value area high and low. So we got a value area high of 1972.75. We got a point of control of 1968.5, where we're trading right now. We got a bull bear zone 1965, okay? And then we got a bottom of value all the way down here at 1958, okay? Okay, and then we got the top of yesterday's middle at like 1961.5 down to 1957.5. So that's what we're looking at for value area highs and lows. We have those single prints that we've talked about in bracket D and bracket I, also to be part of our. And I keep making this bigger because I don't want you to, and I put out yesterday, if you guys remember, how, all this stuff was showing me how positive, or how, let's say, bullish the market was yesterday, right? All right. So right now we are, the MACD has slowed down. It looks like the CCI may be, if when it crosses the center line, that's when we'll be looking to see if the market has turned as far as market sentiment. All right. So now let's go to the 5-minute pivot. Let's see where that's at. All right. So right now, 5-minute pivot is sitting down here at 1965. Now I got a question today on Twitter. Do I use it as support? Do I use it as resistance? Do I use it as, So I got an answer for you. It's everything. I use it for everything, right? But I don't like to trade on the other side of my pivot, right? So we got a bullish pivot, all right? And the market's down here at 1965, okay? I'm kind of looking in here. Look where this market took off from, right? So just because I have a bullish pivot doesn't mean that I want to jump in on the long side. I want to buy dips. So if the market broke down here, we'd be taking out those single prints and held up. Yeah. Then I'm jumping back on. But take a look at this indicator. If the market broke down here, we'd be below all this support, right? So sometimes the market, so what I'm trying to tell you is that when you hear a pivot change during the day, it's a change of the trend, right? So right now I've got the pivots bullish as far as the 5-minute, 15-minute, and the 30-minute, right? So now I go and I take a look. Let me bring down the sisters, right? So I bring these into the play. Okay. Here's the NASDAQ. We got the NASDAQ bullish. That pivots at 43, 44, 51. All right. Now I bring down the TM. Okay. All right. Now this is giving me a mixed reading, right? Because I've got the TM, the Russell, and a sell. Okay. And it has, I'm sorry, this is the YM. All right. So this is the Dow, and it's in a sell. Okay. And it has to get above 16,538 for it to become bullish. Okay. And then I've got the Russell right here. Okay. Let me fix that chart. Okay. I've got that bullish. That's at 1159.5. Now, when I get conflicting pivots, it's telling me there could be a choppy trade this morning, and I kind of just lay off until I can and stay on the sideline until I can get some idea where all of them are getting lined up and making a move together. Okay, so so that's telling me, and then along with the fact that we got it such an evenly distributed distribution right here on the profile and unfinished on both ends, is that we're going to get a two-sided trade today. Two-sided trade. Okay. I say that a lot. I do say it a lot, but most days are two-sided, and we get what, maybe 3 to 4 trend days a month. Okay. All right. So the key is that we've got, the FOMC meeting coming out tomorrow. I think there was a lot of short covering rally yesterday. And I think that we're going to get a two-sided trade today, and people will be flattening out their positions. Okay. Also, let's look at some stuff that has surprised me a little bit. We got gold on the rally. Okay. Gold on the rally. Gold is trading above value at, what is that? $1,112.10. We've got the value high at 1,104.98. I've got the bull bear zone at 1,103.80. I got the point of control at 1,103.40, and the bottom of value at 1,102.83. Gold has been moving in a consolidation mode, and I think it's getting ready to make its next big move. And everybody's trying to say that it's going down. It's going down to 1,000. So gold's been consolidating. I think we got to get the Fed business behind us before it makes its move. Now, when you look at bonds, the way they traded yesterday, okay, bonds broke. We rallied. That's telling me, well, when we were rallying yesterday, I kept thinking, and look where we came from with the bonds. We came from this 155 area, made a loop down here at 152. And I'm thinking, well, when the market was rallying, that's telling me they're not going to cut. They're not going to raise the rate. They're not going to raise it. Okay. But bonds broke. So I still think when you look at futures, there's a 50-50 chance tomorrow. And then, we talk about this all the time. This is what makes markets great. Everybody has different opinions. What makes you a great trader, if you can get a phone call to Janet Yellen and she could tell you what she's going to do before everybody else. Oh, is there anybody who gets that information? Come on. I don't know. Goldman, not Goldman. Not Morgan, no. B of A, come on. Why can't we get all that information, right? We pay our taxes. We should be able to get information that the banks get. I don't know. I'm so sarcastic at times. Anyway, that's the bonds. And then let's bring over oil. And okay, I'm wrong. Oil's going back. That's it. Back to $100. Okay. Overproduction. I was at a gas conference yesterday. I was the guest of one of the lead, well, ConocoPhillips, Jim Duncan, Dr. Jim Duncan, very intelligent man. Listen to his whole hour luncheon presentation about energy in as a whole. And the issue with oil is, even though the price of oil has gone down, okay, they still have to produce it. And the way Dr. Duncan phrased it yesterday was, if you're a magician and you only have one trick, and that's producing oil, then you got to keep doing the same trick, right? So even though the price is down, they still have to pay bills and create revenue. So that's why nobody's cutting production. They're going to produce what they have and bring in revenues. Now, that may lead to a Chapter 11 and a reorganization of debt, especially with the high yield bonds that were issued to these companies that were in the energy sector. But reorganization is not out of business, right? So they're going to keep producing. They're not going to cut production. Now, some stuff is coming offline, but with shale, once you find it, you got to drill it, because if you don't drill it, it disappears. So I think that there's, they're going to keep producing, and the Iranians are online. So I don't see production. I don't see the Russians. I don't see anybody curtailing production. Now, exploration might be a different story, as long as we stay down here. But the production is not cutting back. So that, coupled with the global slowdown, would be an issue. All right. So that's what I've got on the oil industry. So, Goldman is predicting mid-20s, low 20s. So that's what I've got so far. I'm looking for failure on both sides here today. Kind of a choppy trade right before the Fed minutes come out.
Ready for questions?
Yeah, go ahead.
When you say a buying tail, does that mean that it's an unfinished bottom?
Yes. Right here. Let me show you. Sort of like the same thing as a wick on a candlestick, right? A buying wick. So right down here. Sorry, hold on. Still trying to learn to use this. Right here, see this? Okay, opened here, right? We broke down, made this low, right? And then rallied off of it, okay? And then C never came back, never came close to it. But also, this is indicative, and this is what, when you have two letters and then one letter, bracket D, and then bracket G, all right, bracket G, all right, then you had a little H, and then I went back up, and J and K went back up. That was indicative of a trend, a trend day up, and then later in the day we got consolidation, and then made new highs. So yes, that's what that means, a buying tail.
Okay.
Okay.
How do you enter the market once you sense it's a trend day? Can you show it on the chart?
All right. So the problem with trend days is if you're thinking about rotations, okay. So we're talking about, what are our average rotations? I think they're saying it's 800, right? 800 points, but I think that's wrong. So we got to double check that. But
9 points today.
It's a 9-point rotation, and remember, that's based over 30 days. So we've had so much volatility. I think that's really skewed. So if you waited for a 9-point rotation, you wouldn't have got back in here, right? So that's the problem. You got to look for some rotation, right? We got this B down here. Right here, once I got back above the opening range, I'd be looking to get back in the market. Okay. Here on this pullback on bracket D, and when I saw bracket BC here and D couldn't take that out, I would have been looking to get in there. So, and then I would use my stop is 48.75, because it would have been the opening range, the opening print. I didn't want to get above the opening print again right here. I'm sorry. So that's it's hard, because And here's the difference, the biggest difference from when I was trading in the pit, right? When the computers get a hold of it on a trend day, you know, we're always used to the fact that, you know, oh, the market's got to be more orderly than that. But when these knuckleheads and all these buy programs kick in, you can't argue with the computer, right? So you got to just kind of, you know, get in and try to look for some sort of pullback. Now on a trend day, what you'll find out is that you don't get more than a 2-point pullback, and the market keeps making highs. And when you see that kind of when you see that, you're going to have to, you know, kind of trust that you've seen 2 by 2 and that you want to jump in because, you know, it's already looking like a trend day. So that's how I do it. Any other questions, Ann?
No, got it.
We got him?
Yeah.
All right. Hold on a second. Let me stop sharing chart. Yesterday, I just ended the video because I didn't know what I was doing, I guess. Stop sharing. All right. Now, I got new glasses. As you can see, I left the price tag on here because if they break, I'm going to bring them back. You know, I saw Caddyshack, right? All right. All right. Let's go. All right. Trading futures, options on futures and retail off-exchange foreign currency transaction involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results, and the following information is an expression of our opinions and is provided for educational purposes only. So that's what I got for you today. I think that, okay. I'm trying to get them to sponsor me. No, I'm not. Actually, so anyway, I'm not expecting much of a trade today. I think we got the big short covering rally yesterday, and I think the market's going to be, you know, going to have a, whatever they say, it's going to be a violent 15 minutes. Okay, so if I were you, be smart and stay on the sidelines because it will be violent. It'll be, you know, up, down, and then it will make up its mind. So I think that that's going to be important, and make sure that you don't get yourself, unless you're, you know, you're one of these people that like the action and, you know, you want to just flip the coin and go with it, right? You know, on the trading floor, when we didn't have a clear cut idea of where the market was going, all we do is take our trading cards, throw it up in the air, it would come down, boom, 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 boom. If it landed on, you know, blue, we bought, landed on red, we sold. No, we didn't do that. But, you know, it was, it's good. Sometimes when you get frustrated in the markets, it seems to make more sense. Gives you a reason, right? I heard a guy say yesterday, if when you're looking at market direction and you're looking at indicators and you're looking at all the different things that give you an idea to trade, right? And this is kind of, you know, it's kind of, you know, maybe a little not politically correct, but it said if strangling a cat or a dog in the middle of the night at 2 o'clock in the morning, all right, and if you started strangling the cat and if it didn't meow or didn't run away and meant the market was going up or down, you would get thousands of traders to go out there and strangle cats in the middle of the night. I'm just telling you that this is such a superstitious business at times, and you have to find what makes it yours. You got to find what is your safeguard, right? What makes you initiate that buy and sell, right? Because, you know, let's face it, when you lose money, it's not a good feeling. Nobody likes to lose money, right? And if you lose it, you know, 4 or 5 days in a row, you get a real negative attitude about trading and you get depressed. So you just need to understand that it's just part of the business. You just got to contain those losses. All right, everybody, good luck. Stay with us on Twitter. We are doing our best to keep you guys in the black, right? In the black, I'm sorry. But just stay with us. And, you know, email us any questions and anything we can do better. All right, everybody, have a good day trading. Talk to you later. It's always fun being with you. Bye.